I never thought I would see the day that traders completely ignore a government shutdown. It's incredible. Ladies and gentlemen, fellow traders, trading is easy if you have lots of capital. If you've got loads of money, it makes trading so much easier. Hello, everyone. Welcome to the live show. Hope you're all having fun. Hope you're all making loads and loads of money. And everything's going well. Hello, Coral. Today was an interesting day for me. My South African Rand trade got stopped out. Wow, and I've had it for such a long time. Now we wait for a new trade. We don't revenge trade it. We don't get back in. We just wait for a new trade. And that's how it goes. And oh my goodness, I'm losing $35 on Brent oil, and I'm losing $25 on the United States dollar, and the Canadian dollar's another $26 on this platform. Goodness me. Oh, and the German DAX is also gone, stopped out. Oops, that one's also gone by the wayside. So it's been a bad day, actually. But really, $35. Oh, no. On the bigger accounts, that would make a difference. But yeah, South African Rand, that one, yeah, that's a bit of a bummer. But if I look at it, it's kind of strange. The whole thing around the South African Rand is kind of strange. It's the oddest one of all. The economy in South Africa is absolutely horrific. And yeah, and if you look at the world around you, you know, and if you just look at the way the country's run, it really shouldn't be getting stronger. And with the dollar trying to strengthen, this really shouldn't be getting better. But yeah, it is. It is. But if you look at the McDonald's formula, where, you know, if you go and buy a Big Mac in America, it'll cost you nearly $10, $9 something. And if you go and buy the same Big Mac in South Africa, it'll cost you close to 100 Rand, 99 Rand, or something to that effect altogether for Big Mac and chips or whatever. And if you take that into account, then the Rand should be at 10 to 1. It definitely shouldn't be at 18 to 1 or 19 to 1 against the US dollar. So if you look at it in that light of, you know, of things, then perhaps they're right. Perhaps it should be strengthening. But if you look at the overall economy and the way things are going, and you look at what the roads look like up north and whatnot, we're not talking about Cape Town now. Cape Town is very well run. It's actually, you know, everything works, but everything north of that tends to be a mess. And you look at that and you think the trains are not running, South African Airways is almost bankrupt, the electricity department is almost bankrupt, and all these things that have gone down. And you think, how can the Rand be getting stronger? How can the Rand even be strengthening? What's going on here? That is questionable, but that's how it goes. You trade what you see. My call on the United States dollar, Japanese yen. Hello, Fani. Hi, Blue Mango. Tywald, how's it going? No meetings for a change. Must be a very important man with all your meetings. Oh, goodness. But yeah, all good. Here we go. So my call on the Japanese yen was quite simple, and that is, you know, the sellers are getting back into the market here, as well as the fact that there's a big gap, as well as the fact if you look at the RSI, this thing is seriously overbought. And fundamentally, the Japanese government does not like their yen at 150. So they tend to step in and try and push it down. A lot of people are saying testing the 153 before a big correction down. And I expect there will be quite a sizable correction back down again. And that'll make up for the loss on the South African Rand. Hopefully. And then we've got the Canadian dollar as well, which is also milling around in this area. But you can see I've actually put a little trend in there to see that it is actually starting to short-term trend on down. Interesting. Hello, David. Henry. Hello, everyone. It's always good to see you guys. Always nice to have you here. And I see a lot of you get here on a Thursday as well as a Tuesday. So you must be in that middle of the road time zone where you can fit in. But there are a lot of guys that can't fit into those both sessions. And I try and cover everything. I see there's a lot of live traders on YouTube that do London session and US session and so on. And I actually don't want to call a session that because, if you say London session, what's that? London session. It's like the whole day from that time to that time. And the US session is from what? 3:30 till 12 o'clock tonight, actually. And the live show is only for an hour or two. So, you can't really call it a session. It's more like it should be called London opening or US opening or something like that. Yeah, that's another way that people do it, but then you only catch one side of the world. So I try to not show all the little trades as much as a little bit of education, rather, on how you can trade and what happens in the world and what's going down. I am still very amazed at how everyone is ignoring this, the fact that there's a government shutdown in the background and people are just buying. And that the Dixie's actually starting to go up a little bit. So it is very, very strange that everyone's just ignoring what's happening in the background. But that's been happening. That's been sort of a thing for the last year or so, where everybody's just been kind of ignoring the news and the fundamentals in the background and just buying, just carrying on. Every time there's a possibility to buy, they just buy some more. It's really interesting. Euro CHF. Any opinion on the Euro CHF? Well, I'll most certainly give you an opinion on the Euro CHF. Boom. Let's see if I can just find it here. There we go. Euro CHF. If I just glance at the chart, it's bearish. Most certainly bearish. Boom. Let me just see. Quick glance. And a quick glance. I would say a trend line is a good one here. Draw the trend in pretty much. And you can bring it down over there. There's better trades than this. That's my opinion. There's definitely better trades than this, but there you go. I would draw it in trend, and it's going bearish in trend. If you want to go bullish, you've got to wait for it to go past that prior high over there. If you want to go short, you want to actually. It's too late now to go in the trend. I would wait for it to break past the prior low or to break through this trend and give it some more. But yeah, it's in a bearish trend at the moment. It's also in a bit of a range, but it's broken through that range. So it's looking more short than anything. Because if I look at that level there, it's broken through that level there, gone back up, come back down. So yeah, if you're looking at that, it's just going to keep on going down. It looks like. I don't see it going anywhere other than down. But yeah, the title of my video today was the shocking truth about having limited funds. In other words, it's easy to trade if you can sit in drawdown, if you've got lots and lots and lots and lots of money, if you've got loads of dosh in your pocket, if you've got loads of dosh in the bank, it's much easier to trade than if you don't. And this is all based on my psychology and fear story that I always give you guys. And it's really important to understand that fear plays a major part in your trading. While we think it's all about the charts, while we believe it's all about these charts, while we believe that these charts will make us money and they'll somehow predict the future and they'll tell you what's going to happen next, because we see it bounce through a resistance and that's our breakout and there's a big green candle going up. So the DAX is probably going to go all the way to 25,400 because it's broken through and it's predicting the future. No, what charts do? They cannot predict the future. You can't predict the future and you cannot time the market. What charts do is they tell you what happened in the past and it'll probably happen again in the future. So it gives you some insight as to what's going to happen next. But fear is what prevents you from making the money here. If you take this trade, let's go to today's trade of the day, which I didn't take on this account because I'm trying to keep these accounts open at the same time. So if there's too much drawdown per day, then you get a bit of a problem. So I would rather take this on another account. But So we called it short, and it's going against you, and it's gone into the long side slightly. And you're thinking, oh, that Rob called that wrong again. He's having a really bad week. But if you've got lots of capital and you're trading into trades like this and you're a couple of $1,000 down, you look at it and go, it's okay, I'll just sit in the drawdown, and when it comes back, I'll get out of it, and it'll run the other way. And if it goes to stop loss, I'll take the losses and the small losses, and I'll make the big wins. But what you've got to do when you get into trading, we always talk about the 1%, is make sure that you've got that 1% cover. In other words, you can cover these trades for 1%, and it won't hurt you in any way, shape, or form if you lose every single trade you take. If you lose 10 trades in a row and you're risking $250 per trade, just say, and you lose $2,500, can you afford to lose that $2,500? Because if you can't, then it affects your trading in a really, really, really big way. It affects your mindset. It affects your psychology in the most horrific way. To be fair, if you have loads and loads and loads of money, and you're like Tywald, who's always in meetings, and you've got millions of dollars in the bank, and you take $100,000 and you decide to trade with that, then you start losing $10,000 or $20,000 on that $100,000. While it psychologically hurts you and it's a bit painful and it's annoying, and I mean, it doesn't matter who you are, how long you've been trading, or how much money you've got, losing $20,000 is not fun. In fact, losing in general is not fun. We all want to win. But you're not soul destroyed by it. You're just kind of irked by it. You're kind of like, I lost $20,000, but I've still got $300 million in the bank, so it's okay. But if you only have $100,000 in your pocket, $100,000 to your name, it's your last $100,000. Maybe you've been retrenched from work. Maybe it's your pension. Maybe you just can't get a job. So you're trading, and it's your last $100,000, and you start losing $10,000 or $20,000. That's a different kind of psychology. That's a different kind of pain, and that's a different kind of loss of concentration, because when you're in that kind of trouble, when you see yourself in that kind of trouble, you've just lost 10 or 20% of your entire wealth in one foul shoot, and that will cause heart palpitations. It'll cause stress to levels that you just can't describe. Because how do you get back from that? How do you recover? If that now gets down to almost zero, you're in serious trouble. So how do you recover from that? It becomes a really serious issue. It becomes a really big problem. And I've preached this over and over and over again. You have to be careful with your levels of trading. So many people I've heard come to me and say, can I start trading with $200? Can I start trading with $1,000? Can I start trading with $1 million? All these questions. How much money do I need to start trading? So for you, the chap who asked me, can I start with $200? You, the chap who asked me, can I start with $1,000? Sure you can. Sure you can. Can you make a living from it? Certainly not. So what you've got to ask yourself is, what do I want to do with that $200? What do I want to do with that $1,000, whatever it is you have? Let's talk about $200. Because the only thing you can do with it is try to make it grow. And if your earnings are coming from somewhere else, then it's not a big deal. You could simply open an investment account, put the $200 in there, buy your first share for $200, hold on to it, and next month put another $200 in if you have it. But if that's not the scenario, there's a problem. If you need to use that $200 to make money, there's a problem. If you just need to use it to grow it to a larger amount and say, do you know what, at the end of the year, if my $200 turns into $500 or $600, I'll be happy with that. That's quite a good win. Then you can do that. That's fine. But if you're expecting to take that $200 and turn it into $20,000, you're delusional, actually, because that's not going to happen. That's not going to happen, not unless you're very, very, very lucky, very, very fortunate somehow. It's a bit like playing the lottery, mate. So what I say to you is, yes, Of course, you can trade with $200. I mean, you can open a brokerage account. They'll give you leverage trading. There's so many of them out there that will allow you to start with next to nothing. And they'll give you the opportunity. And the trouble with it is, if you've only got $200 and you're trying to leverage trade or trade it, there's a very strong possibility you're going to lose that $200. You're probably going to throw it in the bin. And in fact, you might as well take it right now and just go and throw it in the bin, because that's probably what's going to happen to it. That said, you're going to gain some experience and you're probably going to learn from the experience. Whereas if you were to invest it and put it in a share and just buy one share of something or two shares or something and hold on to it forever and add to that as you go along, then you won't lose it because it's one-to-one. But on leverage trading, in all likelihood, you'll probably lose it because you can't handle the drawdown, you can't cover the losses, you can't sit with losses on the account. What you might be able to do is buy a funded account or a prop firm account where you can trade with 25,000 or 100,000, not 100,000, I don't think you can buy one for that price, maybe a $25,000 account, and then you can practice and learn from that. And if you do well, you might be able to get some profit out of that. That's one way of using your $200 to make money. But if you want to try and make a living out of trading and you actually want to become a full-time trader, then you're not going to make money by simply trying to trade with small amounts of money. You need a large amount of capital to make a living trading, and you also need time. You need time to learn. You need to learn the markets. And you've got to make sure you've got lots and lots and lots of cover behind you so that you're not as stressed out when you do start taking some losses. If it's your last 50,000 or 100,000, you could affect your trading very negatively by trying to follow your trades or trying to make money out of your trades and seeing your money go out the door or fall out of the door. It's insanely stressful if it's your last money. I get the question all the time, and that's why I'm going over this topic, because a small amount of money, you can make it grow. You'll probably lose it, but you can make it grow. But you can't use it. You can't do anything with it. As Nick says here, best to get out of the flat currency and buy some gold or silver. You know, you can take, like I said, you can take the $200 and buy a couple of shares with it. You know, or one share, buy a couple of, maybe 2 shares in Coca-Cola or something, or 3 shares. I think you'll be able to buy 3. And then that's your first share. Leave it in the investment account and have a 30-year plan. You know, that you could do. That you could do. If you want to trade it, whether you want to trade crypto, whether you want to trade Forex, whether you want to trade indexes, shares, whatever, if you're trading it, if you're not experienced, in all likelihood, you will probably lose it. And there's too many guys out there who think they can come into trading with $200 and actually make a living, somehow make $20,000 in a year or $30,000 or something. You're not going to do that. That's not going to happen. You will end up losing. You will end up losing it. It's quite crazy, really. But it is what it is. And if you can handle the losses, and you see, the first thing you've got to understand when you get into trading, as I've told you guys 1 million times, probably 1 million times, you've got to understand that you're going to take losses. You have to understand that you're going to take losses. Now, if you know that you're going to take losses, surely you have to understand that when you take those losses, you have to be able to afford those losses. And it's, you know, if you win your first 5 trades and you do well, and then you start taking losses, that's kind of relaxing. You're kind of like, oh, well, you know, I can take a loss here and there. But if your first 5 trades are losses, wow, that can be quite painful, because then you start thinking, wow, this is a losing game. You might even jump out of trading and run off and become a tapiologist or something. But like I say, you have to be able to cover those losses. You have to understand that if you know you're going to take losses, you have to be able to have the account that can absorb those losses. If you wanted to say get into a US 500 trade or S&P 500 trade on leverage trading over a long period, so you believe it's going to go to 7,500 on the US 500, and you jump into the S&P 500 and you say, well, I'm going to buy it 67, 60, and I know it's going to get to 7,500 long term. And then tomorrow it starts turning against you and dropping down to 5,000. How much money do you have, and can you afford, how far can you afford to let it drop if you don't want to have a stop loss and if you just want to hold it forever? Always better to cover a stop loss and let it just take it out and start again. As I did, for example, with the South African Rand, I knew that I had a stop loss on it. I had a firm belief that it would go up. But guess what? I was wrong. With all my years of experience, I was wrong. Can you believe it? Because I knew, and I know within me, that I will be wrong quite often. And I will be wrong 50% of the time. And I accept it. You have to accept that you're going to be wrong sometimes. And if you can accept it, and you can absorb the losses here and there, it's not a big deal. It's not going to end the whole scenario. What would I do about this trade? Would I go, oh, I've got to get back into that? Well, yeah, I am going to get back into it because I still believe in it, but only when it gives me a signal, and only when it tells me it's going that direction, it's going that way, and it's breaking structure, or it's giving me a proper trade where I can put a stop loss in, and I can put a target price in, and I can manage the risk, and I can manage the trade. That's when I'm going to take the trade. When I say you don't need the charts to trade, when I say that the strategy is everything, you still need to use the charts to tell you that perhaps the trade's going to go in the right direction, because I'm not going to feel good about just taking a trade for the sake of taking a trade. I'm looking for a trade that's going to go in my direction, and I'm looking for the odds to be in my favor, always looking for the odds to be in my favor. I had someone tell me the other day in the comments, how can you tell me trading's 50-50? I've never had a less than 50% win rate, and I've always got I always win trades, and so on and so on and so on. And and you're a useless trader if you're a 50-50. I could only laugh, sorry, could only chuckle, because I know what's coming in to this person one day is that evil big loss, that's coming, because the only way you can have such a good win rate, for you to have a 60% win rate, just 60%, not even 80, not even 70, just a 60% win rate. You have to be one of the best traders around. You have to be an insanely good trader. But there's a lot of people out there boasting 70 or 80% win rates, but they're basing it on scalping. They're basing it on, I won $50 7 times, but I lost $1,000 on the 8th trade. They're not basing it on trading where you know your risk is 1% and you're making 2, 3, 4% on your wins. They're not basing it on that. Because if I leave this Brent crude oil trade in and I don't touch it because I have the belief that I've got a loss of 270 and a profit of 724 if it goes my way. If this trade doesn't work out for me, just like the SA Rand, and it goes against me and it takes out my stop loss, that's considered one of my losses. But if it goes for me and it goes to the $700, that's considered one of my wins. And it goes into the winning pile. Do you know how difficult it is for this to reach the winning side and actually give me that statistic of a win rate? Which is why win rates don't make you money. You see, it's easy for me to get out of this trade at this green line here early with a $50 or $100 profit, which is ridiculous because I'm risking 270, and then say, I won the trade. Look at me. I won the trade. And I won 7 trades out of 10. It's easy for me to do that. But can that person who says they've never lost more than They've never had a situation where they lose half their trades. Can any of them tell me that they're winning those kinds of wins or making those kinds of targets? Not one of them can. They're all making small, ridiculous wins. They're all making small, ridiculous, stupid wins. The ones that are making more than 50%, maybe 60%, like I say to you, with decent wins, that will be your best traders on earth. Those will be such good traders. If you are breaking even in trading, you're doing well. You're doing extremely well. And if you're 50-50 on your win rate, you're an insanely good trader. That sounds funny, but this is the facts. This is how it is. People need to get their heads around this. And if that's the case, then you need capital to absorb those losses. You need lots and lots and lots of capital to absorb those losses, because there will be losses. No, it's difficult to explain, but I'm getting there. Nick says the only way I can get above 40% win rate is to trade multiple contracts and do partial exits and trades moves your way. And, you know, interestingly enough, Nick, as you say that, so now you start showing a win rate because you're doing partial exits and you multiple contracts, and you know it's kind of moving the goalposts a little bit. And that's why I say, if you have a target in place, you take a trade, you choose a target, you choose a loss. It's insanely difficult to reach that target. It's not easy to reach those targets. And for someone to say that they're so good that they've never gone more than a 50% loss rate, then, well, I actually feel sorry for those people, because they haven't seen the light and they don't know what oncoming train is coming towards them. Because I've seen those oncoming trains on more than one occasion. There's been more than one crash in my 33 years of trading. Somebody the other day said to me, surely it's 34 years by now. I've only been, it's this year, guys. I mean, come on. Maybe it'll be 34 next year. I don't know. I'm slicing pineapples here. I don't know. But anyway, I'm just saying, yeah, a lot of those people haven't seen that oncoming train. That oncoming train is a monster. And I'm seeing it now a lot. Like I said, with this US 500 index, I'm seeing everyone just buying all the way up. Not worried about anything that's happening in the world. Not a concern in the world. Everything's just hunky-dory. And it's not. It really isn't. If I look at the economy, did you know that just the other day, I don't know if it's still like that, but yesterday, the day before, whatever the case, the US currency, the mighty dollar, was actually rated as the weakest currency in the world. Wow, that's crazy. I never thought I would ever hear those words. The weakest currency in the world. Now, what does that tell you about an economy in a superpower country? It tells you that they're having an interesting time. It really does. You know, when people go to the shops and they can't afford food, when people are living in the streets in tents, something is wrong. Something is not right. And I look at the markets and I think the markets are not showing the picture. The people that are buying into the markets, it almost feels like they're buying into a bubble. A bubble. Imagine a bubble. And if it pops, boof. Insane stuff. But yeah, the topic of today is you've got to have capital to trade, guys. I mean, if you want to trade with $200, be my guest. Do your best. Make some money. But don't expect to live off it. You're delusional. You know, what you have to do is you have to perhaps buy a prop firm account, or just understand that you need to make a living somewhere else and just try and grow that money the best way that you can. Where do you get capital? Capital you get from the bank, you get it from a prop firm, you get it from wherever. But you know, I was always told as a youngster when I started trading, that I should never use my credit card to trade. I should never use credit. I should never borrow money to trade. So I did pay heed to that advice big time. Oh, I'm sorry, Coral. It's probably the way I'm talking. I'm trying to get a point across. I'm not upset at all. If I do sound upset, terribly sorry. It's just the way I'm trying to get a point across. It's just because people don't seem to understand that very important point of the 50-50. And when I'm trying to get a point across, I might actually sound a little bit upset sometimes. I might actually sound a little bit offish, I suppose. But I'm not upset. I promise you I'm not upset. I'm just really trying to get that point across the best way I possibly can. Yeah, sorry. Perhaps because I'm talking slowly, and I tend to talk slowly when I really want to push a point across. And you know, the big thing that I've found effectively, especially with the 50-50, is I get a lot of kickback on it. You know, a lot of people saying, yeah, that's rubbish and whatnot. So I really need to point it out. I really need to push it forward. And I really need people to understand that you need money in the market. You need cash in the market. You see, the other thing that I struggle with is telling people that you can't take $200 and just turn it into $1 million. It's not that easy. It's not that simple, of course. It's actually quite difficult. But believe me, no, definitely not in any way or the slightest bit upset, no. I know it sounds that way sometimes. It's very difficult for me to keep, how can I put it, a consistent smile on my face, consistently keeping on going and whatnot. You know, it's I would like to, but it doesn't mean that I'm unhappy or anything like that. If I'm trying to put a point across, sometimes I need to put it across, man. As Danny says, he would love to have a 50-50 strike rate. Hi, New Robotic. It's great to have you. Protagonist is here. Protagonist, I don't mind you commenting on the chat, but could you be more specific for the chat so that everybody could sort of understand what you're talking about a little bit? Because what you've written here is a couple of codes of perhaps shares and whatnot. Maybe tell us about it. Tell us about it. Tell us why. Tell us some information. It's interesting for everyone, and it's a bit of fun. You know, it's great if you want to talk about anything. It doesn't matter what it is. If it's the German DAX, if it's the Nvidia, if it's Coke or whatever, and you want to say something about it, then tell everybody what you're thinking. What you're thinking about it. If you want to write SMQ or whatever, or MQ or whatever, say this one is a buy at this price, and I think it's going to go long, or what does everybody else think, or whatever the case. And just, you know, give everybody a bit of insight. I love it, the fact that it's great that you're actually commenting and all that, but it's interesting for people to know what's going on. I would love to have, yeah. You too. Hello, Rob. Hello, everyone. Hello. How's it? Good to see you. Good to see you on board. Lovely stuff. Right. So anyway, I was trying to have a look at this trade again, the United States dollar South African rand. I'm thinking I might get back into this trade when it goes back through that trend resistance and goes back to the upside. Oh, that's going to look good. That's going to be the way to go. And then we'll get back into another long trade on that. I'm definitely not going short on the South African rand because it's been short for so long, and it really shouldn't be going short the way things are going. And then this Japanese one, I gotta say, guys, I have called it short. And just bear in mind one thing with this Japanese yen, very important thing, and that is I've broken the rules here. Totally broken the rules. And that is, I've traded before it's given me any confirmation on a break of structure. It's given me any confirmation on a break of a prior low or anything or whatever. But what I did see is the fundamentals behind it, as I told you earlier. And I've also seen that the sellers were getting back in. I've also seen the big gap at the bottom, and I also noted that it's way overbought. And that is something that the pros will do, is if something is insanely overbought and there's a lot of fundamental things behind it, then they'll take that trade. And I'm just putting my money in with their money, so to speak, because I believe they will take that trade. Bonnie, that was relatives as retail guys battling smart money. We are fighting with one hand tied. Hey, Sir Lunch, good to see you. Sir Lunch is doing very well, guys. He's got another account approved, doing really well. Really great. That's relatives, retail guys battling smart money. The reality is, yes. You know, what us retail traders never seem to understand is that 95% of the money is institutional money. It's big money. It's really big money that's moving the markets. We are such a small portion of the market. March was my lucky month. I made okay from 20 euro in a month. I will say that market was in good momentum then, just like we are now on gold. If you catch some momentum and you catch the right trade, those are the trades you're waiting for. Remember I told you guys that only 1 or 2 of my trades per year, well, not 1 or 2, maybe a few more than that, but a couple of my trades per year make me an insane profit. Sometimes never, but most of the time, okay? I have those trades in a year, and those are the nicest trades in the world to have, is that trade. It's a bit like the opposite to that worst trade that you have, where it just keeps on going against you. But sometimes you pick up those trades that just go for you. They just keep on going, and they keep on going. They'll make you so much money, and they just keep on winning and winning and winning, and you just never get out of them. Those are the best trades in the world. And if you catch one of those, you ride the hell out of it. You ride it, because that's your money. You're going to make so much money out of that. And that's going to pile into your pile. And you're looking for those couple of trades every year, because that's what's going to make you the profit. Those are the best trades in the world. And if you catch that run, go for it. You go for it. And then you can turn small amounts of money into rather large amounts of money as well. So I like what Henry Love says, March was my lucky month. Pretty much, yeah. When you stumble across one that goes in your favor, yeah, you pretty much, it is a bit of luck, eh? Certainly feels that way. Yes, Coral, in most cases it is worse than 50-50, most certainly. Did you know that the turtle traders, the guys that made millions in the market, trading only with strategy like we trade, but they had a system of breakout and whatnot, but okay, they only won 20% of their trades. Only 20%. But they made millions. And that's because the 80% small losses, the 20% were those runners, those big runners, and they would make so much money. It was crazy how much money they made. So yes, in many cases, it's worse than 50-50, particularly for beginners. Guys who just get into trading, why do you think you're going to make more than 50% wins? It boggles the mind. It's going to be very difficult for you to do that. First, you've got to get your mind around the charting systems, and you're probably going to stumble across a few systems before you find one that works for you. And then when you do find one that works for you, then you figure out that that doesn't end there. You actually have to learn the psychology behind trading as well, and the fear and all the rest of it. So it just gets more and more and more. And then you find out you have to get some experience, and you have to get some gut feel, and and it just gets more and more and more and more. And at the end of the day, it's difficult to get to that 50-50. Anyone who can get to 50-50 is a really good trader. With slippage and trading costs, it's less than 50-50. And the more you trade, the more impact slippage and commission has. And you're exactly 100 what Rob said. It's like that happened. Yeah. But yeah, it is not easy to be a 50-50 trader. A lot of people believe that they will have win rates and whatnot. And I can only, chuckle when guys turn around to me and try and tell me that they have this win rate and they're going to make money. And then I know that you haven't learned, and you've got an oncoming train, and you've got to learn still. Most people will. They'll figure it out. But it's a really difficult thing to put across, because nobody wants to hear it. Nobody wants to hear that you're not going to win more than 50% of your trades. And then most people think, well, if I can't win more than 50% of my trades, how am I going to make money? Good point, eh? Mm-hmm. But there is another train of thought and another way of trading. And that is, there's a lot of traders out there who actually risk more than what they're winning. That's interesting, eh? They actually risk more than what they're winning. So they'll risk $1,000 to win $100. And then they'll have an insane win rate. Now, if your win rate is incredibly good, and you win lots and lots and lots and lots and lots of trades, and you probably never lose, then you might come out at the end of the day. But most of the time, that ends in disaster, from what I've seen. I've seen it, I've tried it, I've done it, and I've seen that you feel good because you win 8 trades in a row. But that 9th trade just wipes out all those trades, and you start again, and you just start to wonder what's going to happen next. So, yeah, there are those that do insanely well like that and call it like that, but at the end of the day, making a profit that way is very, very difficult. It's a train of thought. It's something that people do. They get in and they take trades and they say, well, I'm going to risk that and keep the stop loss far away so that I can stay in this trade. And then it goes into a drawdown and then it comes back into a profit. And when it comes into a profit, they take the profit and they go. So they keep taking these profits, taking these profits, taking these profits. And then clearly they're going to have a win rate, and clearly they're going to win more than 50% of their trades. The problem with that is they're not hitting targets, proper targets, and when they do take a loss, the loss is usually quite insane. There are also those traders that don't have a stop loss, that have a win rate. Okay, so what they do is they'll take a trade, and they'll be in it for a few minutes, and if it goes into profit, they grab whatever profit they can grab, and they run, taking a lot of small profits, and they're relying on the fact that the trade will come back to them. Most of those will be Forex traders, because Forex does tend to come back at some stage or another, but there as well, you have to have really deep pockets to handle the drawdown, because if you allow a trade like Forex to go into a heavy drawdown, you might have to wait a long time. You could wait 6 months for it to come back and give you that profit that you're looking for. So yeah, there's that type of trading as well, trading with lots of money and having the ability to allow something to go into a serious drawdown, and you could wait for a really long time for it to come back. You know, a good example of that would be, for example, the Euro-US dollar. Euro-US dollar. The Euro-US dollar was 130 a couple of years back. And had you gone long at, say, 128, and it came all the way back, you would have been sitting in this trade for a couple of years, because it went all the way down to 110 or 106, or actually parity went down to 1-to-1. You would have been sitting in this trade now for a couple of years waiting for it to come back. So that person who also said to me that I don't need a stop loss because my trade always comes back to me. Yeah, this will one day go back to 130. But how long do you have? This could take years to get back to 130. Could take years, could take forever to get back to 130. Just that's my point of view, which is why I say it's much better just to take the small loss, walk away, look for a new trade, and see if you can make the money now. You know, if you want to be an investor and you want to say, I'm betting on this and it's going to eventually make me money, then you might as well just invest in an investment account. What are you doing investing in a trading account? It doesn't make any sense whatsoever. Gold is doing well. Gold is shooting the lights out, but it seems to have hit a point here that it doesn't want to go past. I said 4,000 was the level. Somehow found its way up to 4,050. There's a big undecided candle, perhaps a spinning top. Big red candle afterwards. 3 green candles up. Boom. Maybe she's coming down. How far is she going to come down? Probably to this 39.50 level. And then we'll have a rethink about where it's going. Will it go further? Maybe. Will it bounce up? Maybe. But I think it'll come back down to this 39.50. And then we'll have a rethink on gold. Blue Mango says, Rob, you said you see warnings in US stocks. There is an interview on BBC with JP Morgan boss who says the same. JP Morgan boss is Jamie Dimon, eh? I haven't seen the interview. I have not seen the interview, but it's funny how many times I've said something and it kind of comes out of other people's mouths. I've said a few things about Bitcoin that have come out of JP Morgan, BlackRock's mouths. It even came out of Jordan Belfort's mouth. Remember the Wolf of Wall Street, same thing that I said. It's kind of funny. Sometimes I say things and then I find out that someone else is thinking along the same lines. But it makes you feel good when somebody else is thinking along the same lines, because then you realize that maybe your train of thought is not wrong. But it comes with experience. It comes with years of experience. And I've seen it all before. This is not my first rodeo. I've seen it all before. And a lot of guys have not seen it all before. And they think that everything's hunky-dory. But it's not. It's not. I love Nick's comment. One Trump tweet and your quick profit scalp system could lose a lot. You're totally right. No, I don't do time stops now. Jamie Dimon, that's it. Yeah, I don't bind myself to a specific time stop. No, I prefer just to manage the trade. It's a bit easier for me. Don't want to overcomplicate it. So no. Bitcoin. Looks like I called this the wrong way today. Oh no. You know, I saw it break structure here. So I called it short. No, it's kind of going against a bit, but it's going to retest it a second time, which is unusual. It might break through because it retested and came down. So I would have expected that it would have gone. But as we all know, we never really know which way it's going to go. So we shall see. We shall see. I actually found it quite amazing that I've seen this more than once, a few times in the market, where this S&P, the shares just keep on going up, and there's an oncoming train coming. I can see the oncoming train coming, but everybody else can't. And you start to doubt yourself. You start to think, is there something that I'm not seeing? Because remember, this is all institutional money. These are all big, qualified guys that are buying this market. It's not you and me. It's big money. It's big, qualified guys that are buying this market and trusting it. I do think there's a turnover of people in that industry. So you get a lot of younger people coming through the industry and working for these big companies and whatnot. And obviously feeling powerful and doing the thing and all the rest of it, that don't really know. And obviously for them as well, not really their money, is it? It's just their job, but it's not their money. But they trade hundreds of millions of somebody else's money. I don't know what it is, but sometimes I look at it and I start to doubt myself and think, what do they know that I don't know? Why does this thing keep on going up? But because I've seen this more than once, then I realize that, you know what, it's going to happen again. Don't worry about it. It's definitely the same thing is going to happen. It always does. People get overexcited about stuff. Let me just see here. Oh, this is starting to go in that direction. I'm just going to Japan 225, Euro US dollar, NASDAQ, kind of sitting there. Germany, that's the DAX. Okay, so we've got the DAX on the main page. Go back to the main page. Just have a look here. Let's see what we got on the main page, shall we? Oh no, $24 loss. Oh no. Stop the bus. We'll live with that. That's fine. Let's go and check the news, shall we? Let's go and see what's happening on the news. I see you guys are enjoying the Telegram channel. That's always good. Let's see if I can find the news. News and Google page. There we go. There it is. The news. There he is. Look at that. Big banks are walking a political tightrope in Trump's Washington. Okay, there we go. Novo orders to buy Oracle PepsiCo post solid Q3 earnings. Musk's Tesla deal. China widens rare earth curves. Trump to undergo physical exam. Wonder if I reload this, we'll get some new news. Gosh, difficult to say that. Everything seems to be at the flip side of gold's massive year. Interesting stuff. Then we've got the Dixie. Look at that, starting to come back up, eh? As I said to you, this thing's starting to swing around. So I think the Dixie's starting to swing around and come back up, which is why I'm quite surprised at the South African Rand. It is coming back up. And of course, the VIX is rather flat at the moment. So weekly, if we put it on the daily, get a better picture of what's going on. And I expect that sooner or later, we'll get that same spike again. You see, that's another way to look at markets as well, when you're starting to feel a little bit iffy about the markets are just going in one direction. When the markets are going up, the VIX is down. And when the markets go pear-shaped, this happens. So there's usually a bit of a gap between them, and we're coming into that territory where maybe we'll get another one of those. So keep your eyes open, keep your eyes peeled. You just never know what's going to happen next. Always something. Okay, back on our charts. Let's see here. Questions. I would appreciate your opinion. Technique on an issue I'm finding with. I've been trading for some time now. I tend to win more than losses, but I tend to micromanage the trade and close early. And that's exactly what I was saying. Well, the whole point is technique you're fighting with. You've been trading for some time and tend to win more than losses, but tend to micromanage the trade and close early. Those are the key words. Close early. If I was to close all of my trades early, I'd have an insane win rate. But that's exactly what I said now. Now you're winning less than what you're risking. It's like scalping. So now you're risking $250 and you're winning $100. Nothing wrong with the win. Nothing wrong with winning, but you've got this whole mishmash of small wins and you're micromanaging it and you're getting out of your trades. Now, what I would do if I had that psychological issue, and believe me, I have had that in the past. All of us have. Nobody can deny it. What you do is use your stop loss. Use your trailing stop loss. Stop micromanaging the trades. Stop getting out of the trades early. If you're $100 in profit and your brain is saying to you, man, I got to take that profit. I want that profit so bad. Let me take that profit. I want that profit. I don't want to lose that $100. I don't want to lose that $100. Say to yourself, I'm going to pay $20 for this, but I'm going to put my stop loss at $80 behind the $100. And if it comes back and makes me $80, I got my $80. Do that for a while. And then you'll have a whole lot of $80 wins. But then you'll start becoming braver when you start seeing them shoot out north a little bit away, because you'll have a whole load that don't come back and take out your stop loss. A whole lot of them that actually go on to make larger wins. You'll start becoming more confident and say, well, if it's $100 in profit, you know what? I'll put my stop loss at cost, not at $80 at cost. And then if it doesn't come back and it goes to $200, then I'll take my stop loss and I'll move it $100 in profit. Now I'm $100 up. I'm $200 up, and if it goes north, I'll just keep moving my stop loss up behind it. If you want to micromanage it, that's the best way to micromanage it. That way you're not just clicking out of the trade at a small win, and then your win rate will drop below 50%, perhaps. But all I say is that's where win rates come from. Everybody can boast a win rate on small wins. Not many can boast a win rate on proper target reached. That's where the difference comes in. Now, if you're trying to reach that target, the best way to try and reach that target is to try and follow your stop loss up behind the price. Now, like I said to you guys, a couple of my trades in a year will make me a large sum of money. A large proportion of my trades will make target, and that will be a good win. That is a good win. My targets are pretty decent. But then at least 60% of my trades will be a mishmash, small losses and small wins. Those small wins are the ones where I took my stop loss up $100 and it came back and took it up. So I made $100, I made $50, whatever. Those will be in that pile. And then, of course, all the losses, some of them reaching the full stop loss, like South African Rand, the full 250. Some of them getting out at $100 or $50 when I see it doesn't look great and just dump it and move on. I've had enough of that trade. That's what Nick might call a time stop loss. I call it, I'm sick and tired of the trade now. I'm getting out. This is not going anywhere. And I'm maybe $50 in a loss and just let it go. Okay? Because it just keeps on going in that direction. It doesn't feel like it wants to go the way I wanted it to in the first place. When I initially looked at the trade, it looked great. It looked like a good trade. And now I'm looking at it a week later thinking, this is a load of old rubbish, and dump the trade and take the red and walk away. There's a whole bunch of small losses like that that'll be in that pile. That's the best way if you want to, if you can't get over micromanaging your trades. That's the best way to go about it. You know, the other thing is, like, for example, if a trade reaches its target, let's say Brent crude oil, for some other phenomenal, fantastic reason, and I'm manifesting this, goes all the way up to $700, okay? And you've got this profit. Now, it's very easy as a trader to go, phew, that's a good win. That's the win. That's the one. That's it. That's the one. No, because if you do that, how are you going to make those couple of big ones that you talked about now? Those ones that keep on running, that keep on making a fortune, that keep on going, right? So on this account, it's in hundreds, but on my cash account, this is in thousands. So I would be like $7,000 up, and I'd be thinking, yeah, I need to take that because that's a lot of money. Yeah, but what if I could make more? What if I could make double that? Wouldn't that be better? So then what you do, you take the stop loss, you move it right up behind the take profit and wait and see what happens. And if it keeps on going, you just follow your stop loss up. Those are where the big wins come from. Those are where the $50,000 wins come from. Those are where the big money comes from. That's how you make your money. Right. And then Trouble. Have you tried Ray instead of trend line so it extends indefinitely? Or do you prefer the line stops at point B? Can you access Ray clicking the small arrow next to trend line? Give you multiple kinds. I don't use Ray. I just use the line. So I suppose you want you try Ray instead of trend line so it extends indefinitely, or do you prefer point A to point B? You can extend the trend line, of course you can, but I don't use that. You don't need to. You get all these fancy indicators and all these fancy things that do tricks for you. You can extend this as far as you want to, and you can extend Fibonacci extensions. I don't know if there's anything on here that I can do But there are many situations where, for example, trend lines as well on the different time frames. You can create a fan of trend lines. So, for example, if you're on the day chart, you put a trend in, then your 4-hour chart, you put another trend in, 1-hour chart, you put another trend in. They tend to lie in maybe different areas, but further than that, no. Okay, so just keep it simple. Don't get too complicated, but you can use trend line movement on the different time frames. So, for example, if you go up, if you started on the day and you had a trend line over here, then you went to the 4-hour and you got a trend line over there, and then you went to the 1-hour and then you got a trend line up there. So you end up with a kind of a fan of trend lines that you can work with. You can work through them, but prefer not to do that too much, because what it does, it confuses the issue. So now you end up with 3 or 4 different levels that at the end of the day, you want to know where you are on the higher time frame. I get that. That's important. But it tends to confuse the mind, because you sit with these 3 different levels, and then you think, well, if it breaks through that one, or if it breaks through that one, or if it breaks, just keep the one level. If it breaks through that level, you know where you stand. I will use, for example, there's a trend, what was a trend resistance. It broke through that trend resistance, came back, retested it, and it's on its way up, and it's above the trend support. But if it breaks through the trend support, I will look at this line, that old resistance line, which is now a support, and I will wonder, is it going to go through that support, or is it going to bounce and go back up, because it leaves me with a very small gap here. So I will look at that. I will look at that scenario, definitely. But I won't draw the fan of lines in, because it becomes too much and too complicated. You don't need to do that. Just work with the time frame that you're on. Just remember, for example, if you guys, if you see something on the 4-hour chart, and then you go to the 5-minute chart, and it says, but it is actually doing that on the 5-minute chart. Just remember, on the 5-minute chart, the information that you're looking at is only valid for 5 minutes. Whereas on the 4-hour chart, the information that you're looking at is valid for 4 hours. If you're on the day chart, the information you're looking at is valid for the next day. So you've got much more solid information on the higher time frame. So what you're seeing on the 5-minute time frame is valid for now, and now only for the next 5 minutes. It's not valid for your 4-hour chart. The information you're seeing on your 4-hour chart is far more valid for your 5-minute chart than what's valid for the 5-minute chart on the 4-hour chart, if that makes sense. Yeah. Okay. The turtle traders had a 280R stop loss. I think it's a good way to trail your stop loss. Is that more or less what you mean when you say move it right up? Yes, totally, Blue Mango. You can, guys, figure out what works for you as well when it comes to moving your stop loss up. Many a time, I move my stop loss up far too close, and then I get caught out and it takes it out, and then you're like, So you got to work out what you're comfortable with and what works with you or for you. The problem with that is with the 2-to-1 ratio and that sort of thing is I try not to stick to that religiously. What I try to do is try and say make more on your wins than you losing on your losses. So if I've got a $250 stop loss, I'm not going to wait for it to get to $250 or $300 before I move my stop loss up. I might at $200 say, let me move my stop loss into profit, $50, $100. Then I'm happy. And then it comes back, takes it out. I'm not totally destroyed. And normally when that does happen, because of that space, it normally goes all the way anyway. And I'm quite happy that I got my $100. Because if it starts coming back at that rate, normally you're going to get taken out anyway. So I kind of look at, if I've got a 1% stop loss, then I'm happy to move my stop loss up into profit at a 0.5% stop loss, say. Drop the stop loss amount. So instead of risking $250, I'm now risking $100 of my profit, so to speak. Okay. And make it a little bit closer and run it up behind it like that. And then the closer it gets to your target, the closer I move my stop loss up to the price. That being, I'm quite happy to take the profit there. So whichever way, I'm good with that. Okay. So try not to be too rigid with that. Try and figure out what you're comfortable with. Try and figure out what actually works for you in that area, what actually will work for you the best possible way. That's always important. Yeah, well, how will I get that? That extends past point B, and then you can do that. Certainly. I mean, that's how you can project where you're going. If you're looking at, for example, if you've got a situation with the S&P and there's no high, it's at its highest high. It hasn't been higher than this. It hasn't been higher. Where's it going? Where's it going? Then you can either project it with, say, a Fibonacci extension, or you can just draw a straight line up and say, if I keep drawing that up, it's going to get up to there at some stage, 6-9, whatever, and use that as your target. That's kind of where it is. And pretty much that line is infinite while it's in the structure. If it breaks structure, it all changes. So, you know, that's the way of charting. It doesn't always keep going up in a straight line. The structure changes, and then that line doesn't go any further. You have to turn it around and push it the other way, generally. And that's normally what happens. I'm just going to use this line that I got here. So now we're going to draw a line from there and draw it in there. There's your DAX. And with that, you could say that it's going straight up there. And that you could draw indefinitely up to there. But in all likelihood, probably going to break down, break structure, and come crashing down. That's basically what it does. Coral, silver, $50. Boom, 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 boom. Ooh, look at that. That's quite a push. That's a serious push. Probably related to the US dollar. That's a serious push, though. Okay, big move to the upside on silver. You guys that were in silver are making a killing, but you guys that are in gold are also making a killing, because gold is also trying to move up here. It's interesting to see how this is going, because it's really, really, really flying. And just want to draw that up here. Just talking about these infinite lines, as Tyrell puts it. Yeah, that is interesting. It is going, and the guys are pushing gold and pushing gold. Now, the one thing you have to look at here, the institutional money again is pushing gold. And you got to ask yourself the question, why are those guys buying so much gold? Because gold is a safe haven. Gold is a place to put your money when you're not sure what's happening somewhere else. So who's pushing the S&P up and who's pushing gold up? Because something's wrong. So yeah, there's a good chance they're pushing gold up because the S&P is going to hurt. Commodities will go up when the dollar goes down. The dollar was touted as the weakest currency in the world recently, so that might have an effect on it as well. Economies are having problems. Gold is becoming the safe haven trade. Boom, 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 boom. Eddie, don't worry about being late. Great to have you on board. Lovely. Good to see you again. So Lunchalot's taken the DAX long. So Lunchalot's doing very well. I think we should all just follow his trades. As Blue Mango says, SLA went long on DAX. I swear he doesn't ever lose. Yeah, he's done well. He's done well. So Lunch, just don't get overconfident, eh? Just watch yourself. But yeah, enjoy. Enjoy. Blue Mango, I lose heart. Solange has had a good 2 weeks, yeah. I think a lot of people that got into silver and gold, sometimes you can pick something. You can pick something and it just works out in your favor, as I said earlier. And if it works out in your favor, run it. Ride the wave, ride the wave. You see, for yourself, Blue Mango, you're thinking, this guy got into it, maybe I should get into it now. It might be too late. It might be too late. So you should have got into it when he got into it, and then you would have made the money that he made, you see. That's the point. It's a bit like, I'm in this trade. It's going to work in our favor. And let me just put that back there. Sometimes these things are just slow. Okay, so these are all starting to turn. I just want to see how our Japanese yen is looking. And yeah, it's been called by the institutional money that this is going to go down as well. So I think the institutional money is going to sell this yen all the way down to these lower levels, probably come back into the gap. The target should be in this gap. That's why I'm putting it there. I'll put the target down here, right here in the gap, 148, and then we'll see. But that doesn't mean we're going to take profit there. What that means is we're going to move our stop loss all the way down to the target and then follow it down. It could go further, but in all likelihood, it'll probably get down to even these levels at 150. Will it bounce off the 150? Will it hold the 150? It's a round number, difficult figure to look at. But yeah, this is a trade I'm hoping to ride. Brent crude oil is a trade that I'm hoping to ride. I do believe that it's going to eventually break to the upside and go. And when it does, that'll be interesting, particularly when the S&P 500 gives up the gust. That'll be the interesting one. And then this morning I was really looking at the Bitcoin. It's disappointed. It hasn't gone the way I expected it to. It is still bearish, but yeah, we'll see what happens with that. I traded some silver a few weeks ago at 41.42. Didn't see this coming, to be honest. To be fair, Taiwan, a lot of people didn't, but I did say to you guys last week that the traders are going to push gold to 4,000 in all likelihood. But you are pushing the envelope by trading it, because there are going to be some fallbacks here. There are going to be some changes. Now, the danger of gold at the moment is everybody's jumping in, everyone is buying it, and everyone's doing their thing. The strange thing is the S&P 500 is going up at the same time, but if there was a sudden change in the politics in the US, if there was a sudden the government's fine again, everything's great, we're going to reduce interest rates, blah, 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 the world is just fine, gold may correct. It may actually correct, and depending on the dollar as well, it may actually correct. So keep your eyes on that. And that's why I didn't get too excited about it, but I did say that it was going to come, and which means silver will follow in the same run. But I see silver is really, really running today. 51, going like crazy. Going like crazy. So Lancelot's just pointing out that he also has a 40% win rate. Penny, the US dollar, Japanese yen, in all likelihood, in my opinion, 153 is the level. 153, it's testing the 153 level, and it's tested it. It's tested that 153 level. There it is. It's done the 153 test, and it's failed that test, and it's come down. And if it breaks this structure here, it starts to head on down, I think we're in a good place. I think it's going to go in my direction because it is severely overbought. And I kind of know how the pro traders think when it comes to that, and they're just selling it off. So there's a whole lot of big companies at the moment that are saying this is way overbought, just sell, 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 sell. Then there's the Japanese government, which is saying, ooh, enough's enough. We don't want our currency that bad. And then there's also that gap down there that I'm looking at. So even if it gets to 154, I'm good. My stop loss is at 155. Don't think it'll go through there. And we'll see what happens. And I'll try and follow it down as far as it'll possibly go. And then we've got the Canadian dollar as well, the one that we call Looney. Why is it upset with me? What is the Canadian dollar trying to do to me? Is it trying to drive me insane? What has gone wrong with this? Ay, ay, ay. Okay, so I guess the only thing I can do with that is try and just do a reload and see if that works. Because the Canadian loony is going loony. And there, wow, look at this. What is going on here? Gee whiskers, look at that. Okay. Sometimes these charts just get a mind of their own, don't they? Okay, so that's going in our direction again. That's starting to go the correct way. No, I have not lost faith in Bitcoin, that's for sure. I just look at it and think, it kind of went against us a bit. But it has broken structure. It is below that line. It does look like it wants to correct. And I believe it will correct down to these levels. But we'll see. We'll see how it goes. Every trade has its own life. Every trade has its own thought. And this Japanese yen is starting to move in this direction. So good chance that one might actually work out. Then we got Brent crude oil, which is also going in the right direction for a change. So that looks a little bit better. Funny how the S&P is still holding on. German DAX is failing a little bit, coming down to retest that level. Yeah. Should go all in on short duration interest funds. I almost said I'm sitting on cash. BTC must turn here, I think, 11,117,500. But don't take my word, ask SL. Yeah, actually, Blue Mango, we should ask Solancelot what he thinks, because yeah, he's having a good run this week. He's having a good run. Don't ask me, I'm having a bad run this week. Maybe ask SLA. He seems to have a good run this week. But I still think Bitcoin will be a reasonable short. Just remember, guys, on short trades on, and I'm not talking funded accounts now, I'm talking about your cash accounts. Remember, short trades you get paid for, and long trades you pay for in interest on a daily scenario. So just remember, when you take a short, you're basically lending the shares from the broker to sell to someone else. So yeah. Boom, boom. But I do think Bitcoin will probably, in all likelihood, just by looking at it, you just look at it and think, does look like it wants to go down, doesn't it? Does look like it wants to turn around and do a bit of a fall thing. So yeah, I get that feeling. I get that feeling that it wants to go down. So yeah, we might actually get a short there. Yeah. Okay. Do any of you here actually trade bonds? I don't know. I don't know if any of you have actually traded bonds, 2-year bonds, 10-year yields, 5-year. interesting trading as well. Bit slow, but yeah, interesting. You know that most institutions, one of their things is because they're running with people's money, they have people's money in their account. They can't sit with cash. They can't sit with any cash like you and I can. You know, you and I can have cash and powder on the side, put it on the side, and it's fine. And when you see a trade, you can take a trade. You don't have to invest it into anything specific. But these big investment companies, they literally have rules like you're only allowed to sit with 5% cash. Because otherwise, how can you pay your investors back? Oddly enough, they don't, a lot of them are not leverage trading. So it's a bit like my investment account. There's no cash lying. It was very tiny amounts of cash lying in my investment account. It's all invested. And there's always a little bit because there's always that rollover of cash where, you know, it just didn't fit into the share price or whatever the case. But I don't think there's even 1% in cash. It's all invested, everything, always. And then every month I try and add more. So yeah, on that front, it's not trading, that's investing. And it goes for institutional investments as well. They can't sit with cash because that would just defeat the object of investing for clients and whatnot. But on leverage trading, like we're doing here on indexes and Forex, that's a different ballgame, and that you can just bounce around with. Trades come every day, they come all the time. You can always invest the money if you want to. And you need the powder there to cover the margins and so on. It's just another Mango. It's just and Henny. It's just another tradable item. You can trade bonds. You can buy bonds. You know, but the return on them is, it's maybe better just to buy shares. You know. Ooh. It's just another item. Most brokers do have them available if you want to get involved in them. They are around. Gosh, you can even trade orange juice if you want to. It's insane. I always find that interesting. Always, always, always. So there's your gold, straight up. The interesting one is the silver. Wow, look at that move. Yeah, the sellers are coming back in, eh? But it's way overbought, obviously, way overbought. And let me take these lines out of here because they're obviously completely useless now on silver. And let's change this a little bit because silver's changed since we last played around with it here. And I just want to see something here. That's actually quite interesting. Oh dear, what have I done? I have completely messed up here. Wow. I've completely lost the trading program. Can you believe it? Press the wrong button, I think. Try and get it back. Yeah, that'll bring it back. Okay, let's just bring it back. I think it's too many buttons on my mouse. What was I looking at there? I was trying to see something there. Bitcoin. Screensaver. Yeah. Goodness me. Don't know what went wrong there. Typical of me. I was drawing silver. That's what I was doing. Okay. There. Get back into that again. So if you draw that in there, that's just silver. It's very similar to gold, eh? Very similar to gold. So you've got that, it's running along in that railway line. It's running straight up. And it's kind of hit the top. It's kind of hit the trend resistance. It broke through. It's come back down into it. So I think silver's kind of hit its level for now. Way overbought. Way overbought. Gold doing a very similar thing. It's just running straight up in straight line. And the thing is, charts don't move up in straight lines. They tend to, you know, come and go. So interesting stuff. I just want to, let's make this a little bit less of a, a little bit less of a thing. There we go. Put that at the start. Just a Canadian dollar. Okay, it's all back in. Right. Yeah, the spreads will be quite. Yeah, bonds are a strange thing to trade and or invest in or whatever. They're a bit slow, but illiquid. I'm just interested to know if anyone had actually traded them. Actually, what I think Blue Mango, every time there's a bit of weakness and the buyers just step up on these commodities. I think what's happening is people are believing there's going to be a commodity super cycle, because normally when the dollar gets weak, you get this commodity super cycle. So, you know, there's these things in the market which investors tend to run with, or institutions tend to run with, and they're obviously running with that belief that because the dollar is getting weaker, we're going to have this commodity super cycle. And but at the same time, there is one nagging thing, and that nagging thing for me is, why are they buying so many commodities? Why are they buying into the gold, the copper, etc.? What's their plan? What's going on? Is it just because of the dollar? Or do they know something that we don't? Are they concerned about something in the share market, in the S&P and that sort of thing? Are they buying into safe haven? Are they taking their clients' money and moving it into gold? And why? Because we all know the money is made in the shares, not in the gold and the commodities and that sort of thing. So there seems to be a big push towards this, and they're expecting some kind of super cycle in commodities. And you know, the last time that happened, very much most of the metals were used up by China. They were building and building and building and building and building, and they were just buying and buying and buying and buying platinum, palladium, gold, copper, you name it. They silver, the iron, whatever, they were buying it. They were buying loads of it because they were building all these infrastructure buildings. They were building huge roads and whatnot. I don't know if you guys have noticed, they built highways that nobody even uses. But then that suddenly slowed down, and they just sort of stopped, not stopped, but slowed down insanely. So those commodities are not being purchased anymore. So my concern for that this time is, if these commodity prices are going up at such a rate, who's buying the commodities? Who's buying them? Who's supporting the mines? Who? Because, you know, this is all based at the end of the day on the commodity price versus demand and so on, and supply and demand. So you've got to ask yourself, the commodity prices are going up. Is there someone out there that's actually using the commodities, that's actually buying the commodities? Or is it a bubble? Are we just pushing the price up for no reason at all? It's always a question to ask yourself, why are the prices going up like that? What's going on? Is it just safe haven trade? Are we just pushing the price up because we expect something else to happen? It is interesting. Always interesting. But yeah, that's how it goes. Right. Just looking at the Canadian dollar. Okay, so the Japan has now gone back. So it's struggling to get through this trend support here. Struggling to push into the downside. Struggling to get past the prior low and go down. But I think it will. I actually don't think it'll go to 154. I think it will actually. I think 153 is it. Turn around, head on down. There we go. I think it'll go down from here. But that's just my belief. I could easily be wrong. Oh, this one with the South African Rand is still freaking me out. How it keeps on going down. How can the South African Rand be getting stronger? It boggles the mind. Absolutely boggles the mind. Absolutely boggles the mind. Well, great for the people who live in this country, and they're going to have stronger Rand. And wow, yeah, for you guys who come on holiday, yeah, I don't know. We'll see what happens with that. But like I said, the more funds you've got, the better off you are trading, the more relaxed you can be, and the less you have to stress. That is the truth, you know. And as long as you understand that the system and the strategy are different, and that you need a strategy and you need to manage your losses, that you are going to take losses, you'll be okay in the market. You'll figure it out. You'll figure it out one way or the other. You know, like I've said to you guys before, my goal is not actually to sit here and make you rich. My goal is to make you competent, to help you be competent at trading, to stay in the game, and try and make a reasonable profit over a period of an annual year. I'm not sitting here telling you that you can make millions trading. I'm not sitting here telling you that you can turn $100 into $1 million. Definitely not. I'm sitting here telling you that you can become proficient at trading. You can learn how to trade, and you can understand trading, and you can become competent in such a way that you can make a reasonable profit over an annual period, more than you would make, say, in the bank. What do banks offer? Banks are not offering much these days. I think the best you can do in a bank these days is maybe 8 or 9%. And if you're lucky, if you're very lucky, on average, I think 5 or 6% on my side. I don't know about overseas. And then, you know, if you're trading, you can do better than 25% with your eyes closed, just by buying a few shares and leaving them in the market. So yeah, no, it's much of a muchness. But to do 1,000% increase is just insane. It's delusional to think that you're going to make 1,000% interest on your money. That's someone way out there that's thinking along those terms. You might get lucky and do 200 or 300%. You never know. You might be one of those lucky traders who does really well and breaks the bank. I doubt it though. Most people, when they make a huge profit, this is interesting actually. Most people, when they make that huge, let's say you had $10,000 and you turned it into $40,000 or $50,000. Most people will lose that. Most people will throw it back. It's weird. It's actually weird. So they might make a profit at the end of the year, but there might only be 25,000 up rather than 50,000. It's kind of weird, but that's how it goes. There are some that will do well with it, but it depends what type of trading you're doing and how you're doing it. If you're doing large amounts, high amounts, you can make some serious profits. You know, you can push some serious money into the bank. As Fani says, that's what worries about silver. It's connected back to the industry and at these prices not viable. You see, my problem with all commodities is exactly what I said. It's exactly what I said. It doesn't matter which commodity it is. If it's gold, if it's copper, if it's iron, whatever the commodity is, you've got to logically relate it back to someone's using the commodity. There's a supply and demand thing here. Why are we pushing the price up? What's going on with the price? I think at the moment it's being pushed up by a scenario of the safe haven trade. The money's being pushed into those levels because of the fear of what happened in the real market. The problem with that is when that all settles, so the real market comes back to normal, okay? So this is all great. You know what's going to happen to gold and silver if the US government doesn't reopen and it all goes pear-shaped and it doesn't work out? It's going to become really expensive. It's going to just keep on going up. But if that just goes back to normality and interest rates go down and everyone becomes happy in the economy, then commodities are going to go, well, why did we put all the money here when we could have put it there? And they're going to shift all the money back there. You know, there's a finite amount of money available, and the money's being moved around in the markets, and the big money is being moved around in the markets. And those people make decisions based on what's happening in the world. And if they've put all the money into gold, and gold has made a profit, and they see the profit, and there's an opportunity to take it and put it somewhere else, they're going to take it and put it somewhere else, and then that's going to come crashing down with your money in it. So just manage the trade. As long as you manage the trade and you manage the strategy, that'll be fine. You'll be okay because you're managing the strategy. You've put a stop loss in place. I mean, in any trade, we put a stop loss in place. So here we have a trade. We've got a stop loss there. We've got a take profit down there. We're managing the trade. No matter what happens politically, if tonight somebody in Japan stands up and says something absolutely silly that makes this go straight up, we've got a stop loss in place and it's open. So that there's no problem with that scenario. We're okay. We'll be fine. But yeah, it's just to know that can happen and does happen. That's why you manage trades. That's why you put stop losses in place. Like I said to you earlier, for example, on that euro US dollar as an example, and I was saying to you guys, you know, if you look at the euro US dollar, it was at 130. And, you know, so many people have turned around to me and said, yeah, but, you know, these things always cycle back to where they were. And I agree with you, but it depends how deep your pockets are. And it depends how long you've got to wait. Because had you traded into the euro US dollar and said, I'm taking a long at, say, 128, and it hit 130 and it came all the way down. This has now been a couple of years since it was at 130. And it went all the way down to 1-to-1. It went all the way down to parity. It went all the way down. And now it still hasn't reached back to 130. So how long are you going to wait for this to get back if you don't have a stop loss? Which is why I say it's so much better just to take the stop loss and move on to the next trade. I mean, this isn't going back to 130 today. It's going to take a long time. I'm surprised that it's even at 120, 116, you know? So that there was a chap who mentioned that in the comments who said, it always comes back. It always comes back. No, even Forex doesn't always come back. It doesn't always come back. Sometimes it just keeps on going. And then you have to wait. Now, if you've got deep enough pockets and you've got enough money and you're prepared to wait, that's good. But not everybody's got those deep pockets, and not everyone's got that patience to wait that long. I waited a long time for the United States dollar, South African rand to turn around, and it didn't. So now you take the stop loss, you move on, you walk away. Next one. And we will take that trade again. We won't be angry with it if it's a good trade. It turned bad. So you let it go and you move on. Because this is what happens is we tend to say that they'll swing around and they'll come back. It'll come back. It'll come back. You know, the worst case scenario, everyone's done this. Every trader's done this. Every single trader's done this, including me. The dollar cost average. Oh, this is the worst one, the dollar cost average, where the trade goes into a loss and you think, I know this trade's going to work out for me. Let's say it's the Japanese yen. Let's say it's the Japanese yen. We're all looking at, and I saw a few of you said to me here, this is definitely going to go in our favor and it's going to go short, right? There it is going long again. So let's say we're all married to this trade. We all believe in this trade. We all say this is so overbought, got to work out in our favor, got to go down, got to head down into our profit level. And it goes into a loss. And instead of taking the stop loss, you go, no, it's definitely going to come down. It can't possibly go further than that. It always comes back. Remember the words, it always comes back. So you dollar cost average and you double up the trade with a view to it'll come back. So then my cost will be moved up to this 153 or 154 level. So it'll come back to that and it'll take it out. And you look again and it's gone all the way up and it's at 160. And you, no, it can't go further than that. I'll just dollar cost average and I'll add some more. Now there's a point where you're running out of money, or you just can't take that drawdown anymore, or your heart can't take it anymore. It's just too much. There's a point for all retail traders where they just can't do it anymore. It's too far gone. It's too expensive, where they can't sleep at night because the trade has become so big. Do you know how big a trade can become when you keep dollar cost averaging it and you keep making it bigger because you believe it's going to turn around and come back? And there's a point where you start to lose confidence in yourself and you start thinking, it's never coming back. You start thinking it keeps on going against me and just keeps on going against me. It's just getting worse and it's getting worse and it's never coming back. That's why dollar cost averaging doesn't work. And then the fear that kicks in is rather bad and it starts to eat at you and it starts to really eat at you. It starts to hurt you. Take the stop loss, walk away, next trade. Don't dollar cost average. Don't move the stop loss away. You put it there for a reason. Why did I put this stop loss here? Because in my opinion, when I took this trade, if the price gets there, I'm on the wrong side of the trade. In my opinion, when I took this trade, if the price breaks that, I'm way off the trade. There's no way that is in any way, shape, or form a good short trade. So I've lost the plot. Let it go. Walk away next time. Okay? That's the only way that you can take these trades. Okay, so there's a lot going on there. Doesn't require a lot of silver. Guys, I've had a lot to say today, a lot of things to say. I think I'm going to be on my way. Been a fantastic time with you. We've had a bit of fun. We've had a bit of chat, and it's been good. And it's been interesting. It's been an interesting week. It's actually been a very interesting week. I'll be back for the members video tomorrow morning, as usual. And of course, I do have another video coming out tomorrow, which may be of some interest to you. And then you must enjoy your weekend. Have a good weekend. And we'll be back on Monday again. And Tuesday with a live show, of course. Tuesdays and Thursdays are the live shows, guys. I got the different times. 1100 GMT plus 2 for the Tuesday. 1400 GMT plus 2 for the Thursday. Don't forget that. Always important. But guys, on that note, I think I'll be signing off. And I want to say, keep your feet on the ground, reach for the sky, make lots of profit, have a good weekend. And I'll see you again next